Hey everyone, welcome to our live. Today is Tuesday. I'm losing track of time. Tax season, that does it to me. Today, I am talking about a subject that actually brought back memories for me when I owned my hair salon. Last week, working with a salon owner, and we were going through her cash payments and just want to, I don't know, give you guys some tips with how to treat your cash payments so that you can make sure that you're taking this $25,000 tip deduction. It almost tripped her up, but yeah, so we're going to dive into that today. My name is Jennifer. I am the founder and CEO of Hair CEO. We are a business advisory, bookkeeping, and tax firm helping self employed hair professionals and hair business owners run legitimate, profitable, and bankable businesses. And so we are in our series, 2026 series, titled Tax Talk. And I'm coming to you every day for 90 days straight to give you different tax topics to help you prepare for the 2025 tax year. And this month, specifically in February, we're diving deep into the One Big Beautiful Bill and all of the things that impact you as a business owner specifically. If you are live with us, put a live in the chat. Let us know where you are coming from. We have Tara in the chat moderating. She is an enrolled agent here at Hair CEO and senior tax reviewer here. So while I am talking, if you have any questions, feel free to leave it in the chat. So, okay, back to this cash payments. When I ran into this issue with one of my clients, I think this was like last week, the days are running together, but it reminded me of why, for a little bit, I thought about stop taking cash payments in my hair salon. So, a little bit of backstory for those of you who don't know, I used to own a hair salon and I don't do hair. You don't want me doing anyone's hair, but but I ran it, operated it, and the finances were my favorite part. So I ran that for 5 years before I sold it, and anyway, it brought back memories of this issue that we were having. So you know how when you are in your POS system or your booking system, whatever you want to call it, whatever you use to actually accept payments. So it does a great job of tracking credit card payments, which is why a lot of us have them, not only for the scheduling, but really one of the major drivers is having something that will allow you to take credit card payments and debit card payments. So when that happens, everything is tracked for you automatically, the amount, the card number, the amount, how much was taken out in fees. If it's a rewards card, sometimes the transaction fee will be a little higher. And then you also have the breakdown of what was a service fee, what was a product fee, and then lastly, what was a tip fee. Well, when someone pays for cash, when you enter in cash, if you remember, right? Because some of y'all, no judgment zone. This is a free judgment zone, but I'm talking amongst us, right? Where we can say y'all to each other, but we don't let nobody else say y'all to us, right? Because we are collective here. We we're one. But when y'all add the cash payment, if you remember, because you might forget completely, right? So when you do that, uh, Square, for example, let's just stick with Square. Square will say, okay, you had X amount of dollars in credit card payments, and then you had 7,000 in cash payments. Well, the credit card payments are going to break down what was service, what was product, and what was tip. But that cash, if you're just putting in, they paid by cash, they're not collecting how much was collected in tip. And so you're missing out on what was that tip income so that you can write it off. So that is that kind of that trap that you might be in, because what was happening was this particular salon owner, she was putting in how much she received. So let's say the service amount, because we want to use like clean numbers. So if the service amount was $100, right? And this client paid her in cash. And instead of just adding that the client paid her 100, what she did was she said, okay, cash payment was for 140. And so Square was calculating that the cash received was 140, and it was not giving her like, oh, this is the change due. She was just entering it as this was the amount received for this service. And so the only thing Square is going to do is group all of that money together and say, oh, okay, well, you received $140 in cash payments. It's not going to say $40 of that was a tip. And so it created some friction for us with filing 2025 taxes because we wanted to take this tip deduction. So in order to make sure that she was getting the best deduction, we had to go back to her records and go through the Square account, find the cash payments, and make sure she matched it with what the service was. And the reason why we had to go this extra step was because of the way her booking site works. So she has a combination of Acuity, which documents the service that was booked, but then Square is taking the cash or the payment. And so there was no way for Square to know, like, oh, this service is only $100. So what she was putting was, okay, this person paid for the service and collected 140. So that's why we had to manually go back and add in what was cash for the service and what was cash for the tip. And of course, this is huge because we don't want to show 140 if she can write off that $40 and not be taxed on it. So if you have a similar setup with your system where you have the ability to key in cash, just make sure if you're keying in both the service fee and the tip fee, make sure there is a way for you to distinguish service versus tip. So you may need to go back and look at your transactions for 2025, figure out how that was calculated in your software. And then also for 2026, you want to do things differently to make sure that you are calculating this correctly and that your Square or your Vagaro, your Gloss Genius, whatever you're using is calculating or tracking the cash the way you need to so that you can take advantage of this $25,000 tip deduction. Because remember, guys, this tip deduction is going to be here until 2028. We have 25, 6, 7, and 8, 4 years to take advantage of this tip deduction. So you want to make sure that you are tracking your income correctly to take advantage of it. Now, if you are like, you know what, this is too much for me. I don't even, I get a headache even thinking about tracking this stuff. And you you don't want to, do this alone, then I want to invite you to click the link in the description. If you want to work with us for the 2026 filing season, if you need help filing your 2025 taxes or a prior year tax return, then I want you to reserve your spot. We're working with a limited number of clients in this filing season. And so you want to make sure that you reserve your spot before they all are gone. And if you're wondering, well, how do I know if the slots are all gone? You won't be able to reserve anymore once the slots are gone. So if you are able to, get one, then that means there are still slots available. All right. And so that wraps up today. Tomorrow, we will be back with another topic for the 2026 Tax Talk series. And I will see you then. Now, if you're catching this replay and you have specific questions related to anything tax related, shoot it in the comments I do read all of the comments. So if you have a question, I might be able to answer it on one of these future lives. February is pretty much all already set with the different topics, but I am accepting topics for March. So leave it in the chat, and you might get your answer in one of my future lives. All right. Well, have a good evening, and I will see you guys tomorrow.